Good afternoon. Welcome to Latvenergo Investor Webinar. We will begin the call with the company's presentation, after which we will address your questions. You're kindly invited to submit them in writing through the Q&A window below the presentation. For your convenience, the webinar is being recorded and replay will be available shortly after the session. Now let me introduce today's host, member of the Management Board and the CFO, Gunārs Balčūns.
Yes, good afternoon, everyone. Thank you for joining us today. I will present Latvenergo Group financial results for 2025. So first of all, let's take a look at Latvenergo Group. Latvenergo is one of the leading energy suppliers in the Baltics and is the largest electricity producer and also the largest green energy producer in the Baltics. In 2025, we produced 4.7 terawatt hours of electricity. From that, 66% is produced from renewable resources. Our business is structured in two segments: generation and trade, and distribution. Distribution side is vital as it brings cash flow stability. Meanwhile, generation and trade segment focuses on expanding renewable assets and on expanding our customer base in the Baltics. At this point of time, we have already secured 1,144 megawatts of solar and wind capacity, and nearly 500 megawatts are built and operational. Latvenergo is state-owned enterprise holding credit rating of Baa2 with a stable outlook. In 2025, electricity prices in Baltics has stabilized at the level of 81-86 euros per megawatt hour, remaining comparable to 2024 levels, with a mild decrease driven by stronger renewable energy generation. This was supported by continued expansion of installed capacity, particularly in wind and solar. The increase in local generation reduced reliance on imports, with solar output rising by 34% and wind generation increasing by 11%. Nevertheless, the region still faces an electricity generation deficit of approximately 7 terawatt hours. Electricity consumption in 2025 has increased by 2% or by 0.5 terawatt hours. Meanwhile, prices in Poland, Germany, France, and Great Britain increased, and it was mainly driven by slight increase in natural gas price and CO2 prices. Shifting our focus to our financial performance, this slide provides overview of key figures for 2025. While the energy sector faced market environment of decreasing energy prices over last 4 years, our results align with market trend. Lower energy prices has led to an 8% decline in revenues. Meanwhile, the group's EBIT decreased by 25%, and it is mainly due to lower retail sales price to our customers, and also due to lower generation at Daugavas hydropower plants. At the same time, we delivered strong investment growth with a total investment rising by almost 50% compared to previous year and reaching 792 million euros, highlighting our commitment to long-term growth. And of these investments, more than 2/3 were invested in wind and solar assets. If you look at EBIT dynamics, the largest impact come from generation and trade segment. Yes, this decline was mainly due to lower generation at Daugavas hydropower plants. But now let's take a look closer at each segment separately. So, generation and trade segment. In 2025, this segment accounted for 75% of total group's revenues and more than 60% of group's EBITDA. The segment's revenue decline was mainly driven by 17% of lower electricity retail sales price. Meanwhile, segment's EBITDA was mainly affected by 8% drop in generation at Daugavas hydropower plants. In 2025, our customer base grew by 2%, exceeding 914,000 customers. This aligns with the group strategy, which aims to expand our customer base. In 2025, we managed to increase our customer base by 8% in Lithuania and Estonia, reflecting a strong customer interest in electron products across the Baltics. Meanwhile, the number of our gas customers is up by 17%, exceeding 76,000 customers. In 2025, we sold 6.1 terawatt-hour of electricity to our retail customers. This secured our Baltic retail electricity market share of 22%. Meanwhile, our natural gas retail sales in Baltics has increased by 35%, reaching 1.6 terawatt-hours of gas. Now let's take a look closer at our electricity generation indicators. So in total, we generated 4.7 terawatt-hours of electricity. This represents 24% of electricity generated in the Baltics. Overall, in 2025, inflow in the Daugava River returned closer to the long-term average, in contrast to the elevated levels observed in 2023 and 2024. As a result, Daugavas hydropower plants generated 8% less electricity than in previous year and 23% less than in 2023. Meanwhile, our newly built solar and wind assets of 498 megawatts are already showing positive impact on results, adding more than 200 gigawatt hours to our generation portfolio in 2025. Despite weaker results from the Daugavas hydropower plants, we remain the largest electricity producer in the Baltics and the largest renewable electricity producer in the Baltics. Now let's take a look at distribution segment. At the end of December, the regulated asset value of this segment was 1.6 billion euros. This segment makes up 34% of group's EBITDA. Segment provides electricity distribution services to more than 717,000 customers in Latvia. In 2025, the distribution segment benefited from 3% increase in electricity consumption in Latvia. The segment's revenue increased by 3%, reaching 382 million euros. Meanwhile, segment EBIT increased by 11% to 147 million euros. In line with the group strategies, the target is to continuously and cost-effectively improve the distribution network quality. To achieve this, capital investment program is being implemented, which involve expanding underground cables and increase the use of insulated wires. The modernization of electricity distribution system is also supported by EU funding under Recovery and Resilience Facility, with total funding of nearly 102 million euros, of which 68 million euros were invested in 2025. In 2025, the infrastructure of Sadals tīkls experienced the historically lowest number of faults, and therefore also the system average interruption duration and frequency indexes have been improved significantly if compared to previous years. So now let's turn to investments. So with the rapid growth of wind and solar energy projects, the investments by Latvenergo Group reached almost 800 million euros. More than 2/3 of this amount, or 548 million euros, were invested in wind and solar generation assets. Meanwhile, approximately 20% of the group investments were dedicated to improve distribution service quality. More closer look at specific renewable projects and development pipeline will be followed in upcoming slides. So on this slide, you can see both the structure and the maturity profile of our debt portfolio. Starting with the chart on the right, our funding sources are well diversified. Green bonds accounts for the largest share of 48%, highlighting our strong commitment to sustainable financing, followed by international financial institutions at 31% level and commercial banks at 21% level. Looking at the bar chart on the left, the maturity profile is well spread over the time, except for 2030, when the new green bond matures. In 2026, our maturity obligations remain at low level, entirely made up of loans. However, in 2027, we face an increase in maturities, totaling close to 190 million euros, and more than half of this is tied to our domestic green bonds. In the table below, we provide available sources of short-term liquidity. At the end of 2025, we had cash and cash equivalents at almost 118 million euros, and total unwithdrawn committed agreements of 570,000 million euros. That result in total liquidity reserves of 688 million euros. In addition to that, we also had short-term financial investments that did not qualify as a cash and cash equivalent of almost 150 million euros. Overall, our financial structure is robust, well-diversified funding sources, and relatively balanced maturity profile. Regarding financial targets, yes, Latvenergo has a very comprehensive financial targets with the main focus areas of profitability and sustainable and conservative capital structure. In 2025, return on equity was 8.1%, which is better than the 7% target set in the strategy. Also, adjusted funds from operation net debt ratio in 2025 was well above the target of 25%. That indicates strong financial position of Latvenergo Group. Latvenergo, of course, is committed to maintain our investment-grade credit rating, and the current rating of Baa2 has been stable since 2015. Now let's turn to the recent events. In this section, we will provide an overview of recent events important to our operations. Following this, I will dive into development of renewable portfolio. So, to highlight a few important recent events, in September of 2025, 3 new solar parks with a total capacity of 180 megawatts in Lithuania started operations. In October, we approved base prospectus of 1 billion MTN program. Accordingly, Moody's assigned Baa2 rating. In November, we issued senior unsecured EU green bonds with a maturity of 5 years. Also in November, the foundation stone was being laid for the largest wind park in Latvia, Pienavas Wind, with a total capacity of 147 megawatts. And at the end of December, the total renewable generation capacity reached 498 megawatts. This year, contracts were signed with advisors for acquisition of Telia company stakes in TET and LMT. So advisors have begun work on assessment this investment opportunity. As you may know, the group strategy for 2026 foresees the expansion of the renewable energy generation portfolio by 600 megawatts by 2026. So we are well on track to reach this target. At the end of 2025, we have secured 1,144 megawatts of new solar wind capacity, with almost 500 megawatts already built and operational. In 2025, 8 solar parks with total capacity of 250 megawatts and 3 wind parks totaling 145 megawatts began operations, including the 124 megawatt wind Telšiai wind park in Lithuania. This park is already generating electricity, and its official commissioning is scheduled for the first half of 2026. In addition, foundation works began at Pienavas Wind, currently the largest wind project in Latvia. Meanwhile, construction continued on La Flora Energy and Icebud solar parks. As of today, construction in the Icebud solar park has been completed, and power generation has successfully begun. In addition to expanding renewable capacities, Latvenergo plans to invest in battery storage, which will create synergies with Latvenergo generation and sales portfolio. In 2025, 2 batteries projects with a total capacity of 12 megawatts and 23 megawatt hour were built. And meanwhile, 6 battery projects with a total capacity of 183 megawatts and 429 megawatt hours are in development stage. These investments are very important as it allows to improve financials and improve the results by capturing wind and solar power and releasing during the peak demand. And also it will allow us to provide balancing services for transmission system operators. So let's review some key highlights for our presentation. In 2025, we generated 4.7 terawatt hours of electricity, 66% of which is green, making us the largest renewable electricity producer in the Baltics. We have made great progress in achieving our customer growth targets. In 2025, our electricity customer base grew by 2%, exceeding 940,000 customers, while the number of gas customers increased by 17%, exceeding 76,000 of customers. At this point of time, we have seen that group's medium-term strategy of increasing renewable energy generation portfolio by 600 megawatts by 2026 is planned to be achieved. We already have secured enough wind and solar projects. And yes, 500 megawatts are already operational. And yes, so although we experienced lower EBITDA and profit compared to previous years, our results remain strong. So if you look at funds from operational and net debt ratio, it is above the levels that we have set as a target in strategy. Thank you for your attention, and I'm open to your questions.
Thank you indeed. Participants, please submit your questions in writing through the Q&A window that you see below the presentation. At the given moment, no questions have come in. We will pause for a minute to give everyone an opportunity to submit any final ones. There is a question on the current situation. How has the war in the Middle East impacted Latvenergo?
Yes, thank you. Thank you for the question. I guess it's still too early to draw conclusions. Of course, we have seen that in the financial markets, markets are reacting, and at the moment, the gas price and also Brent oil price has increased quite substantially. However, the price increase is quite far from the levels in 2022. So from security of supply perspective, the cold period of the year has been passed, so it is, I guess, a good thing. Meanwhile, of course, the increase in energy prices could influence economical growth in Europe. So probably that is one of the influences. Of course, it could also drive inflation up. However, if you look at for us, then typically the higher energy prices are giving the benefit for electricity producers. So from that perspective, we see that the investments that we have made in solar and wind projects will be very important to minimize the negative impact from the price increase.
Thank you. As no new questions have come in, that concludes our Q&A session. Participants, thank you for joining us today. We appreciate your time and interest.
Thank you very much.